over the last, we created in December. I think I had briefly talked about it in January call as well. It was originally created in a top-down manner, but subsequent to that, in the month of December and January, the whole leadership team spent a lot of time in working out the bottom-up plan by BUs for each element of Pinnacle 345, which you could hopefully see in one of the slides we have put in our results presentation. Obviously, that slide also is a 30,000 feet level. There are nth level of details in terms of what products, what market share, what cost structure, against which competition, which geographies, which customers, and how. So all of that has been worked out BU by BU, which we discussed, debated threadbare in January and closed in February with our final presentation to the board. So that strategy we firmly believe in. We think it is achievable. It is bold, but I don't think it is super bold, because if you look at history, there are several companies within chemical sectors also. They have been able to achieve those kind of targets within a 5-year time frame. Secondly, we have some fundamental strengths in our business in terms of the 35 plus chemistries we do, the 7 or 8 product platforms we have, starting from, let's say, our traditional platforms like pyridine, but also newer ones like decatins, pyrethrons, pyroxones, and many others. So we have mapped out the specific opportunities, customers, geographies, which fall at the intersection of these product platforms and chemistries. And in a bottom-up manner, we have created this strategy. So the level of confidence in achieving it is very high. Number 3, a lot of CapEx investment related to these products and chemistries has already happened, as I just explained in response to Rohit's question. We have created capacity worth 1,400 crore rupees of CapEx. That capacity now is coming on stream, and it's, as I just said, it's getting filled very quickly. So many of the product lines which are part of our strategy can be produced in these capacities. So we have ready capacity, and that's why many of the customers are speaking to us for long-term contractual arrangements across agro, pharma, nutrition, and cosmetic sectors. So and fourth and last thing I would say is there's a detailed initiatives plan that has been created behind this strategy. There are 50 plus initiatives falling across different BUs and different functions. Each BU head and functional head is driving that initiative with his or her team, and I am directly championing it, and my office is doing the program management of that. So we are taking a very rigorous approach to managing that whole process as well, so that we stay on track. Obviously, the only unknown factor is how quickly the markets turn around, which is where, as Chairman was also saying, the hope is in the next 1 or 2 quarters, things will start to come back. From a demand perspective, we are already seeing volumes going up. If you look at our specialty chemical business and nutrition business, the volumes have come back quite handsomely. Specialty chemical, in fact, 30% up, nutrition 10% up versus the previous quarter. The price is what we are hopeful that in next 1 or 2 quarters, once China becomes less desperate, we will also start to see some uptick there, and hence we will be on track to deliver on this bold strategy. Hopefully, there's a lot more we can talk about Pinnacle 345. Rohan, I'm just restricting to 3-4 main highlights right now. Let me know if you have any other questions.
No, that's helpful. Sir, in the current quarter on a spec chem business, we see both that the business have witnessed growth on Q-on-Q basis. This is something like EBITDA margins, which is still at quite low at roughly 14%, despite such a strong growth on Q-on-Q basis by roughly 30%. If you can, on a full year basis, if you can give some broader number, not getting into granularity, but roughly out of close to 1,600 crore rupees kind of specialty chemical revenues, if you can break it down a little bit in the CDMO and how much come from the ketene, and in next year, what kind of revenue targeting we are targeting from the ketene and CDMO.
So since we don't disclose the numbers at individual product platforms or growth units level, I won't be able to give that, Rohan, but what I can tell you is, number one, obviously the volumes have grown at 30%. The pricing, of course, there is pressure even versus the last quarter. The prices came down for some of the product lines, and hence the margins have not seen an uptick. It is hovering at 14-15% level. We believe that our specialty chemical business, even today, based on today's product mix, is a business which should give at least 17-18% EBITDA margin in steady state. So there's a erosion of 3-4 percentage points versus what the steady state margin in today's mix should be, largely driven by the fact that prices are subdued or muted. Now, if I fast forward into future strategy, when we are going to have higher share of some of the high product lines we have added, be it diketene derivatives, some of the pyridine derivatives, some intermediates on the agrochemical side, the new products on CDMO, etc., that 18% plus steady state margin will surely be north of 20% plus margin in the next couple of years. And that's how we have created all our business cases for the new capex we have made. So that's our aspiration. Within that, the 1,600 crore revenue number that you made, you talked about, I think bulk, we expect our specialty chemical business as part of this Pinnacle 3-4-5 strategy also. Our specialty chemical business should become at least 3.5 times in next few years. At an overall portfolio level, it should be at least 60% of the overall business. And within that, bulk of the growth will come from CDMO, from our fine chemical business, which is where we have our pyridine and diketene derivatives, and from our microbial solutions business. And just one more addition, the CDMO business that I'm talking about, as we discussed in the previous calls also, I'm talking about CDMO related to agrochemicals, pharmaceuticals, and hopefully semiconductors as well, where we have started to see some initial traction in the last few months. Hello?
Yes. Sir, this current participant has dropped from the queue. The next question is from the line of Gokul Maheshwari from Auriga Capital Advisors. Please go ahead.
Yeah, hi. Thank you for the opportunity. I just wanted to know, in terms of your capex plan of 2,000 crores, you mentioned about 600-700 crores to be spent in FY25. Could you sort of give a broader indication of what beyond that in terms of the, I'm not talking of numbers, but more in terms of the projects which you would want to take once this capex plan is behind us?
Gokul, your voice was slightly muffled, but if I understood the question correctly, you are saying beyond this 2,000 crore, what? So as you're talking about the FY25 600 crore, what kind of capex you are taking? Is that the question?
Yeah. So your 2,000 crores of capex plan from FY22 to 25, I believe 600-700 crores would be spent in FY25. But what would be the spends or projects which you would take beyond FY25? If you could give some color on it, and if you could even quantify it, that would be great.
Yeah. So first, in this 600-700 crore that we plan to do in this fiscal year, as I mentioned in my opening remarks, there are a few opportunities which we have more or less decided, but we are yet to do the capex approval. Let's say I talked about the CCCBT, the food grade human nutrition product. We have the niacinamide product which is coming up in September. There will be some capex related to that. We have a plan for GMP3 for our CDMO business. So those are some of the areas that we are planning for this year. And yeah, and beyond that, there are certain opportunities in horizon. Obviously, the concrete plans have to be created. For instance, this long-term contract we are negotiating with our agrochemical customers. We will need expansion of current capacities. There will be some capex going there. We have plans for our diketene next phase of derivatives. We have done 2 phases. We have phase 3 and phase 4. We have a couple of products in microbial segments where we are evaluating GMP grade plants. Then on the microbial side also, we have a new platform coming up for for the human nutrition also, we have some premixes for which we are expanding the capacity, or we are planning to expand the capacity. So just stepping back, if you look at the priorities for our different BUs in the investor presentation, all the new capex, be it in 2025, FY 2025 or beyond, will be aligned to that strategy and those priorities.
Given the number of initiatives, so beyond 25 also, your capex range could be around 400-500 crores per annum?
Yes. So obviously this original 2,000 crore announced take us to, let's say, the end of FY25 in terms of capex deployment, and we feel the full potential coming from that 2,000 crore of investment plus our existing business is, let's say, taking us close to 8,000 crore odd in terms of top line. For the 3x growth in revenue from today's baseline, we will obviously need more capex, at least another 1,500 to 2,000 crore based on some broad estimates. Of course, the details have to be worked out, and that will translate to at least 500-600 crore every year from now onwards.
Okay.
For next 3 years.
Right. And thank you for that. And lastly, on the margins front, you are investing more on the specialty, and you've mentioned in the past that the mix of this specialty would be becoming 60-70% versus the current 40-50% or so. With that mix coming in, what would be your steady state margins? I'm not talking for the next 12 months, but more from a 3 to 4 year perspective.
Yeah, so we have worked it out. So first, one correction, it's not mainly, it's only. So whatever investments we are making, we are going to make only in specialty chemicals or specialty nutrition products like CCCBT. For each of those capexes, our internal criteria is at least 20% plus of EBITDA margin and 20% plus of ROCE. So otherwise, we are not approving those capex. In fact, we are not even recommending that to the board. Now, if you take all of that into account, plus whatever we have invested in the last 2 years, our view is at the overall portfolio level, our margin, as I was saying in the beginning, steady state margin should surely be north of 20% plus. The specialty will be higher. Obviously, we have acetyl business which remains volatile. Nutrition should be at least 15% plus. So at the overall company level, we are quite confident that if we execute this strategy successfully, we should be north of 20%.
Great, Deepak. Thank you so much for this, and all the best.
Thank you.
Thank you. The next question is from the line of Pranav Tendulkar from Aware Investments. Please go ahead.
Hi, sir. Thanks a lot. Can you hear me?
Yes.
Thank you. Sir, in terms of the semiconductor product that you are planning to manufacture, is it for export or Indian? That is one. And is it for that wafer manufacturing level, or is it related to cleaning and blasting, etc.? And what is the market opportunity in similar products?
So Pranav, these are, as I think I mentioned on the previous investor call also, most of these inquiries are coming to our CDMO business, which means by nature of our CDMO business, these are initial leads where customers are testing waters and giving us volumes in kgs to see whether the product quality is in line with their expectations. Most of these are international customers. I had mentioned, I think, in the January call that till that time we had gotten 3-4 leads. Now we have another half a dozen. We are evaluating internally which ones are aligned with our chemistry strengths, which ones are not. But most of these are coming to CDMO business. And right now the focus is to make the product in line with customers' expectations and then send the samples. And once the samples are approved, then we get initial volumes booked with them. And obviously, given that semiconductor segment globally is growing very fast, the hope is once we are in, then the volumes will grow very fast.
Yeah, but having said that, I would like to further add that any large contract on CDMO and specific investments if we have to make, we'll be doing basically on the basis of take or pay. Otherwise, we will not be investing.
Right, sir. Right.
You know, all volume business from our existing multipurpose facility, that's a separate thing. But any specific investment, if we make any specific large investment which Deepak was talking about, if the contract materializes, then we will be doing on the basis of take or pay. Because that we would not like to risk our investments on the basis of any contracts which are not take or pay.
And on the semiconductor side, which is where your question specifically was, Pranav, there obviously the volumes are small currently. So we have multi-purpose plants. Whatever inquiries we have gotten so far and which we are responding to, we feel comfortable and confident that we can do those products in our multi-purpose facilities, which we have in the CDMO business. Obviously, the big contracts on the agro side and some of them maybe on the pharma side also, there the arrangement is very different, which is in some cases we may need new facilities which are dedicated, and hence Chairman's point that it would be take or pay contracts.
Right, sir. Right, sir. Sir, also you commissioned 2 plants. One is that diketene derivatives and I think a cosmetic grade chemical plant. And you were also going to commission one more plant in next quarter. I've missed the nature of the plant that will be commissioned. Can you just elaborate what is it?
Pranav, your voice is breaking, but let me, I think, just factually correct you. We have commissioned 3 plants in last 4 months. In December, we commissioned a small agro intermediates plant in Bharuch. In January, we commissioned a bigger agro intermediates and actives plant again in Bharuch. And in February, March, we commissioned a diketene derivatives plant which can do 2 products. So these are the 3 plants which have come up in the last 4 months, all aligned with our long-term strategy. The agro intermediates plants both the plants are targeted towards doing CDMO/CMO arrangements with our innovator customers globally in agrochemicals. In fact, from the bigger plants, we shipped first CMO contractual order in the month of February already. And we are currently, as Chairman also said in the beginning, we are in discussions with several agrochemical customers to commit that capacity to couple of them. The diketene plant, the products coming out of that are advanced intermediates, high margin products which go into pharma, paint and cosmetic segments. And there we are already getting a lot of traction, and that capacity we are already getting good traction to fill up that capacity hopefully in next couple of quarters itself. In fact, we are already thinking about how to debottleneck or expand that capacity. The plant which is going to come up in next few months is the niacinamide, cosmetic grade niacinamide and food grade niacin plant, which is expected to get commissioned in the month of September this year. And that will be targeting the high grade, high margin vitamin B3 segment in the cosmetics and food applications.
Got it, sir. Got it, sir. The last question from my side. So with current added capacity in last 12 months, what is the revenue potential at current prices of products? So we are operating at 60%, but obviously the products that will come in the new plants are much better. So what is the revenue potential with the current prevailing prices?
I think I already gave the answer, Pranav, earlier. We are at 4,500 crore today. And I said on the back of the capacity that we have put up in last 2 years and what we'll be putting up in this year, we have full potential roadmap or visibility to at least 8,000 crore.
Okay, sir. Thanks a lot.
Thank you. The next question comes from the line of Nirav J from Anvil Research. Please go ahead.
Yeah, thanks for the opportunity, sir. So I have 2 questions. So one is on the diketene part. Sir, since we have commissioned the derivatives plant and the plant is getting ramped up, what sort of value addition in terms of per kg or percentage realizations we can see over and above the base diketene? And along with, if you can just quantify the market of diketene and diketene derivatives in India.
So I can't answer with precise numbers on the first one, but Neeraj, as you might already know from our previous calls, diketene is an unstable molecule, so it cannot be sold as a standalone molecule. So whatever value addition, whatever you sell in the market is on the back of value addition. And typically, now we have at least 5 products in our portfolio which are derivatives of diketene. These are at least 1 or 2 steps ahead of diketene, and now we are gradually adding more advanced stage derivatives in the diketene portfolio, which will come up in phase 3 and phase 4, as I mentioned earlier. Sorry, what was your second question?
The market for diketene and diketene derivatives in India.
Yeah, so I think overall, do you remember Prakash's total imports?
16,000 it is left.
Yeah, so total market in India at least is 30,000 tons of diketene derivatives. One of our competitors is already active there with about 40-50% share of that. Rest was imports until a couple of years back. We have already taken significant share of rest of the market, and the bigger opportunity, by the way, in diketene derivatives is the exports, because like our other core products, be it pyridine, anhydride, or B3, we are globally number 1 or number 2 and the lowest cost producer. Our aspiration in diketene derivatives is also to be among the top 3 global players, having very competitive cost structure on the back of the plant that we have created, which has happened on the back of our own process engineering. So we are very confident that as we scale up our diketene capacity, and add more derivatives in phase 3 and phase 4 of diketene, we will not be able to take significant share of Indian market, but also of the global market.
So just to understand in slightly qualitatively, let's say every step of value addition of diketene derivatives, let's say you mentioned that we are now at 1 or 2 steps further, would be further value additions will happen in phase 2, phase 3. What sort of percentage benefits we start getting on over and above the base diketene? Could it be 10%, 15%? Some understanding of some range in that would be helpful.
So I wish, Neeraj, the world of chemicals was working that simply.
Okay.
Obviously, depending on how complex the reaction is, what are the other chemicals which are getting added in each reaction, the quantum of value addition on each step will vary significantly. In fact, oftentimes in recent years we have encountered situations where if we go too far out in the value chain, the margin profile actually drops, because then you are sourcing something which is cheaply available from China or elsewhere, and hence you get margin only for that one step, even if you are fully integrated. So all kinds of permutations and combinations are feasible here, and hence, even though diketene has, let's say, at least 30-40 different derivatives which we have mapped out, we are not trying to make each and every one of them. For every derivative we have done so far, we have picked up, and what we have planned for phase 3 and phase 4, we are doing a thorough assessment of what is the product, which applications it is going into, what is the level of complexity and value addition, and hence what kind of margin profile we can get. And if it is not giving us at least 20% EBITDA margin, then we are not prioritizing it, right? So if there was value addition on every chemical, then we would have added like 50 derivatives by now, but that's not the case. So you have to pick and choose based on several factors, which is what we are doing as we pick up next phase of diketene derivatives. And the same principle by the applies for any value chain. I just took example of diketene because we were talking about it.
Got it. So second question is on the MPP part. So one we commissioned last quarter, the bigger one, which is like 4x of the size, we commissioned in this quarter. So let's say once the MPP starts ramping up, what sort of asset turnover we should work with once it is fully ramped up, and generally how much time it takes to ramp it up fully to realize its full potential?
So typically for our specialty chemical business and MCPs fall in specialty chemicals, the asset turnover is about 1.5 to 1.6. And then that's where I think most of the capex projects we have taken, we built out the peak revenue potential of those product lines which we plan to do in MCPs. All of that adds up to 1.5 plus. Secondly, our experience has been in normal markets, after the plant has been commissioned, it takes at least 12, if not 18 months to get to 70-80% utilization levels, which is what has happened with our phase 1 diketene products, which, as I said, are running at 70%. It's in fact slightly delayed, I would say, because of the soft markets. But the phase 2 products which have come up in February, for instance, we are hoping in next 12 months it will hit 70-80%.
Got it, sir. And just a last clarification. So does this MPPs use our pyridine chemistry as a starting material, which gives us a first more advantage in terms of the other suppliers of the same product to the same set of customers? How do you justify that?
So Neeraj, by definition, MPP can do multiple products. It doesn't have to be a pyridine-based chemistry products. In fact, most of our MPPs will be doing pyridine derivatives, diketene derivatives, and even products outside of these two product platforms.
Got it. So, in and all, how many MPPs do we have now after the commissioning of the last one?
We have 7 fine chemical plants, MPPs. We have 2 GMPs in Bharuch. And we are in the process of putting up more MPPs, as I mentioned earlier. And in agrochemicals, sorry, I forgot to mention the 2 agrochemical plants we have set up recently are MPPs as well.
Sir, if you allow, can I ask?
Sorry to interrupt. We request you to please rejoin the queue for further questions. Thank you. Ladies and gentlemen, that would be our last question for today. I would now like to hand the conference over to the management for closing comments. Over to you, sir.
Thank you all for joining on this call today. We hope we have been able to answer your queries. For further clarification, I would request you to contact me. And thank you once again for your interest in Jubilant Ingrevia Ltd.
Thank you very much.
Thank you. On behalf of Jubilant Ingrevia Ltd, that concludes this conference. Thank you all for joining us. You may now disconnect your lines.